Derivatives are financial securities with a value that is reliant upon or derived from an underlying asset or group of assets, a benchmark. The derivative itself is a contract between two or more parties, and the derivative derives its price from fluctuations in the underlying asset. The most common underlying assets for derivatives are stocks, bonds, commodities, currencies, interest rates, and market indexes. These assets are commonly purchased through brokerages. Originally, derivatives were used to ensure balanced exchange rates for goods traded internationally. Today, derivatives are based upon a wide variety of transactions and have many more uses. There are even derivatives based on weather data, such as the amount of rain or the number of sunny days in a region. Derivatives can trade over the counter or on an exchange. OTC derivatives constitute a greater proportion of the derivatives market. OTC traded derivatives generally have a greater possibility of counterparty risk. Counterparty risk is the danger that one of the parties involved in the transaction might default. Conversely, derivatives that are exchange traded are standardized and more heavily regulated. Derivatives can be used to hedge a position, speculate on the directional movement of an underlying asset, or give leverage to holdings. Their value comes from the fluctuations of the values of the underlying asset. Derivatives provide a way to lock in prices, hedge against unfavorable movements in rates, and mitigate risks, often for a limited cost. In addition, derivatives can often be purchased on margin, that is, with borrowed funds, which makes them even less expensive. On the downside, derivatives are difficult to value because they are based on the price of another asset. Most derivatives are also sensitive to changes in the amount of time to expiration, the cost of holding the underlying asset. Finally, derivatives are usually leveraged instruments, and using leverage cuts both ways. While it can increase the rate of return, it also makes losses mount more quickly. And that was the investment term of the day.